Good day, my name is Issahaku Yahaya, a member from Group 1, and I am presenting on the strategic impact of inflation on the oil and gas industry. And my evidence is drawn from Goyle Public and Limited Company's 2024 annual report. Now, before we begin, let's go to the introduction of this inflation. Inflation has become one of the most powerful macro forces affecting businesses today. It rises production costs, weakens consumer purchasing power, and creates uncertainty in investment planning. The oil and gas industry, particularly vulnerable because the petroleum products are traded globally in foreign currencies, meaning any shift in exchange rates hit these companies immediately. Ghana, Ghana, for instance, has no exception since Ghana is importing refined petroleum products. Companies operating in a downstream sector face for both international price shocks and domestic inflation pressures. This report uses Goyle Public Limited Companies as a case study to analyze how inflation affects strategy, how Goyle has responded, and what further strategic action should be done or taken. Now, industry background and Goyle PLC overview on this inflation. Ghana's downstream petroleum sector covers everything. It covers everything from importation and transportation to the marketing and retail of products like petrol, diesel, aviation fuel, and LPG. The sector is heavily import dependency with most transactions settled in US dollars, meaning prices respond very quickly to exchange rates. Yeah, exchange rates and inflation. Goyle Public Limited Company is one of the most prominent players in this space. It has been listed on the stock market as of 2017, Ghana Stock Exchange Market as of 2017, with the government of Ghana holding about 34.23% government uh, shares of its shares. In 2024, the company recorded a revenue of 20 revenue a revenue of 20.36 billion Ghana cedis, maintain net fixed assets of 1.47 billion Ghana cedis, and invested 11.5 C in CSR activities. These numbers tell us this is a major normally significant company operating under real inflationary pressure. Getting to slide 5 to know the pistol analysis about this thing. Now let's move to slide 5 to know the pistol analysis. And pistol analysis are the macro environmental forces. Now what are these pistol stand for? The P stand for political, E stand for economically, C stand for socially, T stand for technologically, and L stand for legally. And E stand for environmental. Now let's try to expatiate or to explain this thing in their forces that has affected the macro environmental analysis. Now for the to, analysis to understand the macro environment surrounding oil, we apply a pistol analysis because we know stands for politically. Now, politically, the company operates under strict government regulation, including the Companies Act 2019 and the Security Industry Act 2016. Yes, and E, we know E stand for economically. Economically, inflation has driven up interest rates and foreign exchange exposure. Goyle's bank's loan alone reached about 886.2 million Ghana cedi as of 2024 alone. As of 2024 alone, and socially, the company invests in CSR to maintain community trust, especially when rising fuel especially when rising fuel prices could damage public perceptions. And technological, its subsidiary Go Financial Service Limited is rolling out digital payment. Yeah, it's rolling out digital payment infrastructures to improve efficiency. And we now have here legally legally using IFRS accounting standards and strict legal compliances to ensure transparency, investor confidence, and accountability. Goil complies with the IFRS account standards, ensuring transparency and investor confidence. And on the environmental front, the board's training programs now include sustainability awareness and position the company for future energy and regulations. And when we talk about the environmental, what are the environmental forces that has affected this goil this thing? You know, board training includes environmental and sustainability awareness, preparing for upcoming energy sector regulation. At any time, they have to be ready for anything that can affect them. Environmental, especially let's take the COVID-19 that came on 2020. It affects everybody, and everybody has been affected. So the company has to be aware or be ready to accept any environmental challenges that will come to at any point. Now let's go to slide 6 to show the Porter's five forces that has forces that environment that has to be affected or have affected. When we talk about the five forces are supplier power, buyer power, threat of entrance, and threat of substitutes. That's the competitive rivalry. Now, when you talk about the competitive rivalry, looking at industry competitiveness, through Porter's five forces, competitive rivalry is Ghana's downstream petroleum market is significant, with both multinational and indigenous OMCs competing for market shares. And however, oil holds a strong position on this, backed by fuel inventory value at 464.2 million Ghana cedis. You know, supply, and we when we talk about the supplier power is high because petroleum is imported and globally priced, exposing the company to foreign exchange risk. And when we talk about the power, yeah, sorry, the buyer power, moderate institutional buyers need large, they need large volumes of most debtors are public institutions and high credit risk. And for a buyer power is moderate, institutional clients like public bodies purchased in large volumes, giving them some leverage. But Goyle's wide distribution network balances that the threat of new entrants is low due to the high capital requirements to start or to compete with Goyle, and regulatory hurdles and complex logistics and involved. As for substitutes, renewable energy and electric vehicles represent a long-term threat, though their, penetra- though their penetration in Ghana remains limited for now. Now, let's go to slide 2 to know the stakeholders analysis in the Goyle company. This When we talk about the stakeholder analysis, we have the shareholders and investors, we have the government and regulators, we have customers, we have communities, and we have employees and management. Now, the shareholders talk about the shareholder. Goyle interact with the five key stakeholders group, each with a distinct interest. Shareholders and investors expect profitability and returns. Goyle proposed a dividend of 2 point yeah 21.9 million Ghana cedi for 2024 alone, which is strong signal of financial health. Government and regulators shape goals operation through petroleum pricing, policies, taxes, and compliances requirements. Customers range from individual motorists to large corporate institutions and government bodies, and Goyle manages credit risk through internal assessment mechanisms. And the community benefit from 11.5 million Ghana cedis in CSR investment, which projected Goyle social license to operate. And employees along with the management are supported through a structured governance framework. Yes, a structured governance framework that includes audit and finance communities to oversee risks. I think yes, we have gotten the explanation from the stakeholders, shareholders, government and regulators, customers, communities, and employees management. Now let's go to slide 6. So slide 7 to know the dynamic capabilities and resources based view. Yes. Now, when we talk about the dynamic and capabilities resource based views, ability to adapt to the market volatility, and also the strategic sources of oil public limited company. Now, from a dynamic capability perspective, Goil has demonstrated the ability to sense, respond to, and adapt in a volatile environment. A key example is its joint venture with Society Multinational de Bitumes to establish Africa Bitumen Terminal Limited. This move this move diversifies Goil away from traditional fuel retailing and open new revenue streams which attracts more revenue into the company. The company also continuously updates its risk management system in response to changing market conditions. From a resource-based view, we can see that Goyle holds several to imitate strategic resources. Physically, asset worth of 1.7 1.7 1.47 billion Ghana cedis as of 2024. In net book value, holds a strong financial holdings, a well-structured and corporate governance system, and four strategic subsidiaries. Uh, subsidiaries. And four strategic subsidiaries, we have the Go Energy Limited, we have the Goil Upstream, we have Goil Upstream Limited, we have Go Bitumen, we have Go Bitumen Limited, yes, and we have Go Financial Service Limited. These resources from the foundation of Goil's competitive uh, this formed the foundation of Goil competitive advantage in which they knew nobody or no other company can also compete with them. And when we talk about the strategic evaluation, let's move to slide 9 where we talk about strategic evaluation. And actually, the strategic evaluation impact of inflation on Goil Public Limited Company. You know, now let's evaluate how inflation has actually impacted Goil revenue, dropped from 21.72 billion Ghana cedi in 2023 to 20.36 billion as of 2024, indicating a decline in sales volume. However, and this is a critical profit before strong cost management. In terms of behavior, inflation made Goil more cautious. The board and audit committee how actively monitor financial risk and assesses customers' credit worthiness, extend credit. On the impact, in terms of performance, the company maintained pricing discipline and still proposed dividends. Yes, they still propose a dividends despite the challenging environment and strategically the inflationary pressure when we talk about inflationary pressure, pushed Goil to diversify into bitumen through joint ventures and across lubricants, aviation fuel, and financial services through its subsidiaries. Yes, through its subsidiaries. And we have how the behavior, the performance, and the strategy. The behavior is how the inflation raised cost, interest, and exchange rates which increased caution in decision making. And how was they able to respond to this? In strong risk management plus tight credit control policy, board and audit finance committee continuously monitor financial risk, credit assessment before extending credit, and performance impact. We have the performance, how they were able to perform from that year, and strategy, the impact inflation driving uncertainty forced strategic diversity away from traditional fuel and retailing. Retailing. Now let's move to slide 9 which talks about strategic recommendations that we have to. Now, the strategic recommendation, based on my analysis, we propose six strategic. I propose six strategic recommendation. The first three are recommendation one: government should implement currency hedging strategy to protect itself from exchange rate depreciation, diversity its funds sources. Yeah, diversity its fund sources to reduce dependency on costly bank borrowing and tighten working capital management. And recommendation two, the company should invest in modern fuel storage infrastructure, adopt IT-based inventories management, and optimize its transportation network or to lower distribution costs and maintain price competitive. Recommendation three, and the recommendation three should be expand its service station network into high demand areas, deepen its brand position as a trusted national energy provider, and leverage its existing infrastructure to offer a wider range of energy. Now, moving to strategic recommendation 4 to 6, I divided them from 1 to 3 and 4 to 6. When we talk about strategic recommendation 4 to 6, we have the continue we have the recommendation for which goal needs to build stronger dynamics capability. This means investing in market intelligence system to detect macro environment, yes, to detect macro environment, shift early season energy, emerging opportunities in sectors like bitumen and energy infrastructure, and being ready to configure operation when fuel prices change rapidly. Recommendation 5, we have the company should accelerate diversification into complementary energy markets. This includes expanding bitumen production, growing lubricants and industrial energy service, and investing in renewables such as solar powered service stations as Ghana energy mix gradually. Yes, mix gradually involves. And recommendations, government should strengthen its stakeholders relationship by collaborating with government on infrastructure projects, negotiating into long-term supply contracts with international energy suppliers, and also communicating more transparently with investors about how financial risks are being managed. Uh, I think what I've said a lot, and for it to draw a conclusion, let's assume that this study clearly shows that inflation has significantly impacted Goyle PLC, driving up costs, elevating financial rates, and complicating daily operation. Yet, despite all this, Goyle has remained profitable. That is not by accident. It is the result of discipline, pricing, tight financial management, and strategic foresight. Inflation has actually pushed Goyle toward better governance and smarter risk management and long-term diversification. The company ability to sustain performance in difficult macroeconomics environment is a testament to its adaptive strategy posture. As long as Goyle responds proactively, it is well positioned to remain a leader in Ghana's energy sector. Thank you so much.